16A. Continued Healthcare Benefits Program, CHCBP. The Continued Healthcare Benefits Program, or CHCBP, provides temporary healthcare coverage that includes pre-existing conditions. This premium-based healthcare is similar to TRICARE and can be purchased for a period of 18 months to extend coverage when you lose your military benefits. CHCBP is available to you and your family, certain unremarried former spouses, and children who lose military coverage. To be eligible, you must enroll in the program and pay premiums within 60 days after you separate from active duty. By bridging the gap between military health benefits and medical benefits you receive in your new job, CHCBP can ensure your family has continuous medical coverage. It is important that you research different healthcare options. CHCBP may be the best option for temporary healthcare coverage. However, participation is completely optional. Regardless of your situation, you should ask your service personnel office and military treatment facilities for detailed information about healthcare provisions and application procedures. If you want more information about CHCBP, select yes. If not, select no.
16B. Veterans Group Life Insurance. While on active duty, you had Service Members Group Life Insurance, SGLI. An SGLI coverage extension automatically continues this life insurance for 120 days following your separation from active duty. After 120 days, you will be given the opportunity to convert your SGLI to Veterans Group Life Insurance, VGLI, offered by the VA. To convert SGLI to VGLI, submit an application for Veterans Group Life Insurance along with the required premium to the Office of Service Members Group Life Insurance within 1 year and 120 days from your discharge. If you submit your application within 120 days of your discharge from active duty, you will not need to submit evidence of good health. VGLI coverage is renewable term insurance and is issued in multiples of $10,000 up to a maximum of $400,000. Your VGLI coverage cannot exceed the SGLI coverage you had at the time you separated. VGLI policyholders can convert VGLI to a commercial life insurance policy at any time. If you would like more information about VGLI, select yes. If not, select no.
16C. Service Members Group Life Insurance, SGLI. SGLI is a program of low-cost group life insurance that is available to the following service members. Service members who are on active duty or in the National Guard or Ready Reserve. Students attending one of the 4 service academies or in ROTC. And those in the Commissioned Corps of NOAA or Public Health Service. If you receive SGLI, you will have 2 options to convert SGLI once you are released from active duty. You can convert your full-time SGLI coverage to term insurance under the Veterans Group Life Insurance Program or to a permanent insurance plan with a participating commercial insurance company. SGLI has a disability extension which allows service members who are totally disabled at the time of their discharge to retain, at no cost for up to 2 years, the same SGLI coverage they had while in the service. SGLI coverage is available in $50,000 increments up to the maximum of $400,000. If you are interested in making changes to your basic SGLI coverage, contact your personnel office. For information about premiums and refunds, contact your finance office. If you would like more information about SGLI, select yes. If not, select no.
16D. Traumatic Injury Protection under Service Members Group Life Insurance, TSGLI. Traumatic Injury Protection under SGLI is a rider to your Service Members Group Life Insurance. TSGLI provides payment if, while on or off duty, you suffered a qualifying injury as the result of a traumatic event. Effective December 1, 2005, all service members with SGLI have TSGLI, and as of October 1, 2011, TSGLI is payable for all qualifying injuries incurred between October 7, 2001 and November 30, 2005. TSGLI coverage is automatic for those insured under basic SGLI and cannot be declined. TSGLI payments help traumatically injured service members and their families cope with the financial burdens associated with recovering from a severe injury. TSGLI payments range from $25,000 to $100,000 based on the qualifying loss. TSGLI payments have no impact on the amount of SGLI payable. If you want to learn more about TSGLI, select Yes. If not, select No.
16E. Family Service Members Group Life Insurance, FSGLI. Family Service Members Group Life Insurance, FSGLI, provides life insurance protection only in the event of death. It does not provide payments for disability or other supplementary benefits. FSGLI is a service member's benefit, and the member is the beneficiary of the policy. In addition, FSGLI has no cash, loan, paid-up, or extended insurance values and does not pay dividends. FSGLI is issued in $10,000 increments and provides up to $100,000 of life insurance coverage for spouses, not to exceed the amount of SGLI coverage. It provides $10,000 for dependent children. If you decline coverage or elect less than the maximum coverage, you can apply or increase the amount of coverage later. Proof of spouse insurability will be required in these cases. FSGLI can be converted to a commercial insurance policy within 120 days of separation. If you want more information about FSGLI, select Yes. If not, select No.
16F. Service Disabled Veterans Insurance, SDVI. The Service Disabled Veterans Insurance Program was established to meet the insurance needs of certain veterans who have a service-connected disability. SDVI is available in a variety of permanent plans as well as term insurance. Policies are issued for a maximum amount of $10,000. You can apply for SDVI if the following circumstances apply. You were released from active duty under other than dishonorable conditions on or after April 25, 1951. You were rated for a service-connected disability. You are in good health except for any service-connected conditions, and you apply within 2 years from the date VA grants your new service-connected disability. Under certain conditions, the basic SDVI policy waives your premiums if you have total disability. The Veterans Benefits Act of 1992 provided for $20,000 of supplemental coverage to SDVI policyholders. Premiums may not be waived on the supplemental coverage. If you want more information on SDVI, select Yes. If not, select No.
16G. Veterans Mortgage Life Insurance, VMLI. Veterans Mortgage Life Insurance, VMLI, is a mortgage life insurance program designed to pay off the home mortgage of disabled veterans and service members in the event of their death. VMLI provides up to $90,000 of mortgage life insurance payable to the mortgage holder in the event of the veteran's death. The amount of coverage equals the amount of the mortgage still owed, but the maximum cannot exceed $90,000. VMLI is decreasing term insurance, which reduces as the amount of the mortgage is reduced. VMLI has no loan or cash values and pays no dividends. You must be a recipient of the Specially Adapted Housing Grant from VA to be eligible for VMLI. When you receive a grant to purchase a home through Specially Adapted Housing, an advisor from Loan Guarantee will discuss your eligibility for VMLI and help you complete the application. If you want more information about VMLI, select Yes. If not, select No.
16H. VA Life Insurance. VA life insurance programs were specifically created to provide insurance benefits to service members who were not able to get insurance from a private company as a result of the risk of military service or a service-connected disability. During transition, service members need to research Veterans Group Life Insurance as well as the other VA life insurance plans to determine which ones are most appropriate. They also should plan to attend a VA benefits briefing. If you would like more information about VA life insurance, select Yes. If not, select No.
16I. Transitional Healthcare Benefit. For comprehensive information about transitional healthcare tailored to your particular circumstances, plan to attend a VA benefits briefing and talk to a TRICARE representative. Your VA and TRICARE representatives can outline your eligibility for coverage and tell you how long your coverage will last. Medical coverage can be very expensive, so it is important you have the best information possible to make the best choice for your situation. If you want more information about transitional healthcare benefit, select yes. If not, select no.
17A. Financial Management. Unless you already have definite career plans, it could take some time to find a job. Careful financial planning is key to managing on a limited income. Personal financial management specialist on the installation can help you plan. There are also online sites where you can research resources and plan on your own. Be sure to consider paid vacation and holidays, enlistment bonuses, tax-free income, and retirement and healthcare plans when comparing your current benefits with what is offered in the civilian sector. The Thrift Savings Plan, or TSP, is a defined contribution plan you can choose as your retirement plan. The income you receive at retirement will depend on how much you contribute during your working years and the earnings those contributions generate. Your contributions and earnings are yours regardless of the time you serve on active duty. When you separate, if your account balance is $200 or more, you can leave the money in the account. A TSP representative can help you make a partial or full withdrawal at any time. The Survivor Benefit Plan, or SBP, is specifically for retirees. SBP is an optional plan that will pay a surviving spouse a monthly payment to help make up for the loss of retirement income upon the death of a retired service member. Service members and their spouses are equally responsible for the decision to accept or decline SBP. Spouses are required to sign the SBP election form, and coverage cannot be reduced or declined without a spouse's written consent. Even single service members must make this election. Failure to accept or decline SBP results in automatic coverage at the full retirement pay amount. Coverage can be selected for a former spouse or, if the member does not have a spouse or children, for an insurable interest such as a business partner or parent. SBP also could be mandated by a divorce decree. SBP participants pay a monthly premium for this plan. Premiums and benefits are calculated on the base amount or benefit level elected. SBP is an important financial decision and should be carefully considered. If you want more information about financial management, select yes. If not, select no.
17B. Separation pay. Separation pay eligibility and amounts vary from person to person and are determined by Separation Program Designator, or SPD codes. A representative from your military personnel office can provide more details on your particular eligibility, so plan to ask them your specific questions. The actual amount of separation pay is computed by your local finance office. If you are eligible for final pay at separation that includes earned entitlements and pay for accumulated leave, the amount will be reduced by outstanding balances on advance pay you received, as well as on unearned bonus recoupment or other debts you incurred, plus taxes. Transactions already in process could result in additional payments to you after separation, or could create a debt for which you would be responsible. Personnel medically separated for a disability incurred in a combat zone or from combat-related operations could be entitled to enhanced disability separation pay. If you are interested in more information about separation pay, select yes. If not, select no.
17C. Unemployment Compensation. The Unemployment Compensation for Ex-Service Members, UCX, law provides unemployment compensation for certain eligible separated or retired service members. Because each state has different requirements, you need to contact the state where you plan to look for work to determine your eligibility. Receiving unemployment while you look for work can help pay bills and provide financial stability as you establish yourself in the civilian world. Once you file a claim, the state workforce agency will determine if you are eligible to receive unemployment compensation. If you are interested in learning more about unemployment compensation, select yes. If not, select no.
17D. General Money Management. Money management encompasses how you handle all of your monetary assets. While a basic rule of thumb is to have 3 to 6 months of living expenses set aside in the event of lost wages or other emergencies, some might find this an unrealistic goal. Setting a personal savings goal now and working to reach that goal as soon as possible might be more attainable. Budget statements, such as a balance sheet and cash flow statement, are realistic tools for researching financial goals. A balance sheet represents your net worth. It includes your assets, what you own, your liabilities, what you owe, and what the net result would be if you paid off your debts. A cash flow statement summarizes your income and expense transactions over a specific period of time, such as a month or a year, and shows where your money came from and where it went. Your fixed income is your paycheck. Other earnings, such as monetary gifts, represent your variable income. Fixed expenses, such as rent or mortgage payments, utility bills, auto payments, and insurance premiums, do not change in the short run. Variable expenses like groceries, clothing, entertainment, and credit card payments are easier to decrease. Since income drives your budget, you can compare your fixed income with your variable expenses to determine how you can reduce your expenses and put more money in savings. Financial counselors on the installation or online financial planning tools can help you develop a budget and achieve your goals. Debt management is a systematic repayment plan based on earnings and expenses to help an individual become debt-free. A debt management program, which is established for an individual and spreads payments over time, could stop creditors from taking legal action. Debt management programs can only help if a debtor is committed to putting forth effort, sticks to a budget, refrains from overspending, and stops using credit cards. Debt management counselors on the installation or the financial specialist at your command can advise you on debt management. If you would like more information about general money management, select yes. If not, select no.
17E. Personal Savings and Investment. Banks and credit unions offer FDIC or National Credit Union Association insured savings accounts to help you reach your short and long-term financial goals. When shopping for a savings account, look for accounts that offer competitive interest rates on low account balances. As some limit the number of free transactions, also check withdrawal and deposit guidelines. Savings accounts offer low interest earnings but are a way to put money aside to draw on if needed. For higher interest earnings, you need to invest in bonds, certificates of deposit (CDs), stocks, or mutual funds. Bonds, in particular U.S. savings bonds, are an inexpensive way to invest. Companies, cities, states, and even governments sell bonds to help raise money to run their particular institutions. CDs are issued by commercial banks and savings and loans. You receive a small yield on your money, typically 2 to 5%, so the more you invest, the more you earn. Buying stocks gives investors a stake in a company. They have a claim on assets and earnings and liability for losses. If the company does well, investors make money. If the company has a bad quarter or bad year, investors lose money. There is risk involved in investing in stocks. Mutual funds have managers who pool money together from thousands of small investors and buy stocks, bonds, or other securities. Investors in mutual funds purchase a stake in all the investments. If you would like more information about savings and investments, select yes. If not, select no.